Hey everyone, it's Mike from Orderflows, and this is my market analysis. Today is Sunday, actually. It's Sunday, April 23rd, even though I got 22nd on there. But it's been a long time since I've made a video. My life's been upside down for the last few months, and I'm trying to get everything sorted out. It's getting to the point where everything is just about sorted out, and I can sort of get back on a regular schedule and hopefully get some more videos out to you. But I really want to get a video out to explain things to you about the Orderflows Trader software, some of the differences between my software and other software, and more importantly, I want to show you charts, right? I want to show you how to read the order flow. Now, before I begin, a brief disclaimer: this presentation is for educational and informational purposes only, should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that could be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. So, that said, let's take a look at some charts from the last week. There's some very interesting things in the order flow, and NinjaTrader now has an order flow package built into their software, but it's just all it is just a footprint chart. And honestly, you could get order flow software out there for practically free. I know you get you could join some forums, and then they've got a footprint chart on there. But honestly, what's the point if you don't know how to use it? Okay, if you don't know what you're looking at, there's no point. You could have tea leaves telling you what to do, but if you don't know how to read the tea leaves, you're not going to make any right decisions. And with order flow, there's a lot of information out there, and if you don't know what you're looking at, then you'll never be able to make heads or tails of it. Everyone always says, well, you got to spend 10,000 hours in front of the screen to become an expert at it. Well, you know what? I could sit in front of a piano for 10,000 hours, and hopefully by the end of 10,000 hours, I can play the piano. Am I going to be be able to give a concert? No. But will I be able to play some songs? Yeah, probably. And trading is the same way. And I'm really amazed by the number of traders out there. I don't want to call them traders, I'll call them retail traders that I've met who risk their hard-earned money without learning the basic skills required to improve their chances of succeeding at trading. It's like, in order to drive a car without crashing it, play par golf. Golf. Not just I can go. I'm a terrible golfer. I'll go out there and it'll take me 6-8 strokes to finish the hole, right? But if you want to become good, if you want to be able to bowl games consistently over 200, you got to take time. You got to take the time to learn the rules, study the books, and learn from professionals. People that have been doing it for a long time. Take the lessons from experts who they're out there. People are out there that really just want to help you improve your performance in trading. And really, I find that most retail traders don't take advantage of the educational opportunities out there, and instead they just jump in head first into the deep end thinking, oh, I could figure it out and I can make money. Honestly, when it comes to trading, you're trading against people that have been trading for a lot longer than you have. So it's not as if you are trading against people with equal skill levels. It's not like you go to karate class and you compete against people the same belt as you. No, you're competing against the sharpest minds. People out there, I don't like to use the term sharks, but they're just there. They just want to get the money out of your pocket and put it into their pocket. That's what they do. That's how they earn their living. That's what I did for a long time, when I was trading. That was my sole goal, was to take money from other people. It's like playing poker. The only difference is you're not sitting at a table and you're not staring at the guy you're taking the money from. You're on a computer. You're trading against anonymous people on the other end of the trades. It could be one person, it could be a fund, it could be whoever. And the trader's goal is to get the money from somebody else's pocket and put it in their pockets. So let's take a look. So this is the Orderflows Trader software. This is my software that runs on NinjaTrader 7, NinjaTrader 8 as well. This is NinjaTrader 8. I've made the transition to NinjaTrader 8 this year. Sort of kicking and screaming. It's still, I still think it sucks, NinjaTrader 8, honestly. NinjaTrader guys will probably get angry at me for saying that, but compared to some of the other software that's available out there, NinjaTrader is playing catch up on a lot of things, honestly. Is it good? is it stable? Yes, it's stable. But honestly, sometimes, when, little things that drive me nuts is like, if you have to reinstall NinjaTrader 8, say you had to reinstall Windows 10, and Windows 10 is not exactly the most perfect software out there either. No software is perfect, honestly. But, if you have to reinstall Windows 10, then you got to reinstall NinjaTrader. It's going to give you, new machine IDs, and you got to go through all the registration processes over and stuff like that. It's just it's little things like that that just drive people up the wall. But so this is Crude. This is a 1 minute chart. What day is this? Is I think it's Friday. We're trading. This is June. We're trading 68.17. So what makes the order flows traders different is it gives you a lot more information than just a normal footprint chart. All right, and you've got your delta, okay, but you have what are called ratios, and this is a big thing. This is a major part of my order flow analysis, and this is something that I've developed that people have been ripping off, copying, and putting it in their own software and calling it order flow algo this, order flow algo that. But what it does is it tells you when there's price support or price rejection, and it's important because again, this goes back to the education part, right? I provide a lot of education. When you get my software, you get a ton of additional education. You get the 15 hours of the order flows trading course, but you also get access to the inner circle as well now when you buy the software. And right now there's 56 videos on there, and I teach things about like how to read the imbalances, how to use the ratios, how to use the points of controls. But like in this case here, I can see here, we're at a swing high. I've got a ratio I like. It's a blue number, right? If it's black, it's just your normal order flow numbers. If it's blue, it's telling me something. In this case, it's telling me there's price rejection up here. So, this is 3 in the morning Chicago time. Okay, it's kind of quiet, but it's starting to pick up. It generally starts to pick up around 4 in the morning. But I know there's price rejection up in here based on the order flow. And I see selling imbalances coming in here as well, and we got a swing high, we got negative delta. That's a great trade setup right there. And if where are you going to place your stop? That's the other thing that drives me nuts is traders come in and sometimes they think, well, I don't need to use stops. I watched some guy turn $100 into $20,000 trading forex. He doesn't use stops, so I could do the same thing trading futures. No, you can't. No matter what you do, you need some form of money management, risk management. Never trade with, let me put it this way, never trade with money you can't afford to lose. Sometimes people do that, but even if you do everything right, even if you follow all the rules, even if you're the best trader in the world, you can still lose on any given trade. So, to be trading naked without any form of money management, risk management rather, is just going to put you in the poorhouse. So here, to me, this was very low risk trade. You could be getting short here at 68.30. It just comes down and then it just sort of goes sideways. Like I said, it sold off about 5 ticks. Not the greatest trade, but again, it's 3 in the morning. But I know early in the morning there's price rejection up here at the 68.34. It just sort of goes sideways. But then, as we're going sideways, I see signs in the order flow here. I see blue numbers. These are ratios that I like to see. Okay. Now, why am I more interested in these blue ratios underneath as opposed to the blue ratios above? Well, we just sold off. Okay. And after I'll say sold off. I mean, it was a move. Okay, it was a smaller move, but again, it's 3 in the morning, so we're just sort of going sideways. And I'm seeing more blue numbers as underneath than blue numbers above. So I'm sort of looking at this market as just sort of putting in a base. Now, what's interesting is the deltas are kind of small. It's kind of again, it's the morning time, but if you were to put a gun to my head and say, Mike, take a trade, what are you going to do? Buy or sell? Well, I see this base being put in here. I see a lot of negative deltas, but I see blue ratios, and that's telling me that there's forms of price support in here. This is a price support, that's price support, this is price rejection, and negative ratios. So, negative deltas. So, you got the negative deltas. Why isn't the market selling off? I mean, you got to be asking yourself that. You're seeing all these negative deltas in here, but the market is holding. Why do you have negative deltas? Because you have support. You have supportive buying coming in here, bidding in the markets, right? That the sellers are selling into it. That's why you got the negative deltas. and the market's not selling off because someone is there absorbing all that selling that's coming in. There's buyers there willing to bid the market, support that market, and the market's not selling off. So that's telling me, some very valuable information. And then you come down in here, price rejection. Hey, maybe the selling is starting to dry up in here because, again, you're not seeing, strong selling volume anymore coming in at these bottoms of these bars. The sellers are running out of bullets. They're running out of ammunition. And once the sellers dry up, what's going to happen to the market is, boom, you're going to get the bar like this, where it just, boom, pops up 10 cents in one bar in 1 minute. These are the types of bars, you like to get, when you're trading, especially on a 1 minute chart. These are the types of bars you like, especially when the bars, prior to it are trading 3-4 tick ranges, and then boom, you get a 10-cent range. Those are the trades you like to get. And if you're using order flow, it can tip you off. It can tip you off to those moves before they happen. Okay, so again, then we just sort of go sideways. Sign of price rejection here, price resistance here. But again, just sort of going sideways, sideways, sideways. No real clues. And then boom, here you get this nice red arrow. Let's tell me the trap traders. That's what this red arrow is. The green arrow would tell me there's trap traders on the buy side. But again, this is a bar with 2 price levels. I'd put more weight into this one. I love this type of bar. Point of control right at the high. You got a bearish ratio, 0.47. It's a blue number. I know with this arrow, I got trap traders up here. And what happens? Boom, it starts selling off again. Even though you have the green arrow here indicating trap sellers, here are trapped buyers. I'm not putting too much weight into it just because this bar it's a minute chart. This is one of the things you got to deal with when you're trading a 1 minute chart is quiet times. You get no price activity, and it's kind of hard to make heads or tails out of it. But when you get in bars with very valuable information like this, to me this is what I call a low risk trade. Where's your stop? Your stop is just right above here. So if we start trading up into this area and you don't see selling come back in, you get out. You're not placing your stop 10 ticks past this. No, the stop is just right up here above this high. So imagine, you're getting short at 68.40. Your stop's up here at 47, 7-tick stop, and it trades down, from 40 all the way down to down to 30 here. Pops up a little bit to your entry price and just sort of goes sideways, for the rest of the morning. And then like I said, 5 o'clock, boom, it starts picking up. You get this nice pop up here. Is there any signs in the order flow? Yeah, right here again. It's you getting the blue numbers, blue number, blue number. You got a single print right here. But again, it's sort of coming after this period where it's kind of quiet. But would you be taking it? I mean, yeah, it's a trade. It's a trading opportunity. What's your risk? You're getting long in here. It started this bar. Your risk is just right below this level right here. So you're just risking 4 or 5 ticks, and I mean, look what you can get out of it. That's a terrific move. And then it just sort of goes sideways, 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 sideways. Anyway, let's fast forward it here. Excuse me, coughing. Now, this is something that I want to talk about here. Okay, so you're coming into 6 o'clock. Okay, I mean, 6 o'clock Chicago time, which is 7 o'clock New York time. Things are, I'll say normal, but it's New York session. It's running on the New York session. I mean, obviously the old floor hours would be 7, but around 7 o'clock New York time, 6 o'clock, things really start to pick up. This bar, actually this bar right here. Let's talk about this one. Look at this bar. Okay, you got a bearish ratio here. Even earlier you had a bearish ratio, but this one, 1, 2, 3, 4, 5, 6, 7, 8 imbalances. That's important, right? You got stacked imbalance here, some sort of split up imbalances in here. You've got this thin print in here. There's 2 against this 5, 2 against 2 here. So there's not a lot traded here. 3, 5, 3, 2, 5. Okay, so someone just came in and swept the book basically, pushed it down here. So it's going to be interesting to watch what happens on this next bar. Are we going to trade back up into it and fill this sort of quote-unquote gap or not? And we do. We trade back up. We get up to this level, and then it just falls back down. So this information here, all these thin prints, is very valuable information. And again, it's only information you're going to get from an order flow chart, from a volume footprint chart. If you're not using a volume footprint chart, then you're missing out on that information, and there's juicy information there. And if you're willing to take that risk, by watching this bar here, I mean, granted, this is a 1 minute chart, and you're talking about a move from 68.53 down to 68.33, so a 20-cent move in 1 minute. It's a big move, but you got to be watching what's happening next, what's following up. Are we rejecting these prices or what? And we rejected those prices right here. We traded back up into it. We didn't close this gap of thin prints, and we just started selling off. So imagine you can be getting short here, 68.40. This bar here, 68.40. This is 68.40 right here. So say you're getting short somewhere in here. You got a level to hide behind up in here, 68.50. So maybe you're risking 10 ticks. This is 68.50 right here. Is it worth it? Okay, I mean, it's granted, again, this is a bar that is a 20-tick move, but, based on the analysis that you saw in here, said, hey, we didn't close this gap. You still had aggressive selling coming in here. You don't have the buying coming back in here to move us back up into this area we just were. So it's a decent short opportunity. So imagine you're getting short there at 68.40. Yeah, you get this nice bar here. You trade from 68.40 down to 68.10. Which is a nice move, and you just sort of go sideways, work your way back up, hang around here, go sideways, then start coming into the main session. And again, you see it, similar thing right here, right? Look at these thin prints in here, 1, 2, 0, 3, 13. Stacked imbalances right in here. I don't have the stacked imbalance indicator turned on, but if you did, whoops. I'll just show you how to use this software a little bit. If you turn it on, this is what it looks like. Hopefully it'll come up. Go to settings. I have it turned off. Display imbalance clusters. So I'll just make it a little bit stronger so it's easier to read. Hope that's not going to be too strong. Then click apply. Okay, give it a sec. It'll come up here in a second. Just bear with it. Okay, so here you can see it right here. Again, this is a multiple stacked imbalance, 1, 2, 3, 4 levels. Notice how it's holding. We trade, come back up towards it. Don't even get in there. Again, that's a low risk short. I mean, imagine you're getting short here at 08. How much of a drawdown did you take? You took it to 12, I think 12 or 13, before boom, the selling came back in and pushed it down again. Seeing more selling, more selling, more selling, just under pressure. Okay, now this is interesting here. Okay, so you hit this low here, 67. What is that? 61. Start rallying. Imbalances, 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 and you got a stacked imbalance there. You got delta. Look at your delta: 149, 325, then 157. Now, if you got long here, right? I'm not saying that you shouldn't get long here, because I like trades like this where you're coming off the low. Yeah, you're selling off. You hit a low, very strong negative delta. I'd be looking for some sort of bounce. I would like this bar better if this bar made a new low, but you got positive delta. That's a good sign. And then it got stronger positive delta. Multiple imbalances, stacked imbalance off the low, basically. 3 bars off the low. I don't like that the delta is getting a little bit smaller. Although one of the reasons why it's smaller is the volume is quite light in there. And then we just sort of go sideways, sell off a little bit. Get another stacked imbalance coming in here, going sideways. Honestly, this, to me, these two, I would have taken a long here. I would have taken a long here. This one I would have been stopped out on. This one, worked better, but this one I would take. Honestly. I would like to see a stronger delta here, but I know that the volume's a little bit lighter. Delta's decent, honestly. I do like that you got, point of control is higher than, well, it's the same as the previous point of control and higher than the point of control a little bit further. There's going to be losses, right? And, the thing is, right, when people say, traders nowadays, retail traders, they like everything to be black and white. And nobody likes to take a loss. And I tell people, trade each day to break even. And your first goal of each day should just be to do no worse than break even. You want to live to trade another day. Once you understand that day trading is day in, day out, it's a grind, right? It's going to take patience, and more patience. And you're not going to earn a fortune in a day, period. It's what matters is how you wind up at the end of the month that counts. If you gear yourself mentally and position yourself financially, I guess, with proper risk management, so on your bad days you break even. When the good days come along and you basically seem to win on every trade you take, I mean, we've all had those days. We've all had days where you can't do anything right. It's like you go to open the door handle breaks. You go to open the car handle breaks. We all have those days, and we also have those days where no matter what you do, you can't make a mistake. It's like one of the saying, you could be walking around lucky and not even know it. But and so on those good days, those really good days that come along, where every trade you take, your account's going to get bigger, right? So if you could, control your losses, minimize your losses, that's important, right? So trade, each day, come in, have this mentality of, try and come in each day, to break even. Don't think that every day you're going to hit a home run. Trading is a grind. It's yeah, I laugh when I see these movies, like what was that one that came out a few years ago, Wall Street 2, and they're on the trading floor at a firm that's supposed to be like Lehman Brothers, and they're all shouting blah blah blah, buy me this, buy me that, all that. Most trading floors, they're not like that. A lot of these trading floors is like being on a library. Honestly, it's so freaking quiet, and there's not people constantly shouting. On the CME floor, on the CBOT floor, yes, that's how it was, but not off the floors. It's more of a cerebral game, and people tend to keep to themselves. Whereas on the open outcry, on the trading pits, that was really the hustle and bustle and yelling and screaming and waving the arms around, but not in a bank trading floor. So again, to be a successful trader at the end of the month, you got to be around at the end of the month. So if you're how to put it, if you're not trying to minimize your losses, you're not going to be around at the end of the month. And losses do happen. Trades don't work out. Again, I thought that this trade here was a legitimate trade. To me, this is an all systems go type of trade. It didn't work out. Okay, you move on, wait for the next trading opportunity. You get it here, a slightly better entry price. But again, you still got to be able to take it. Now I know some people will be like, well, I just took this loss, I'm not going to wait, I'm not going to take the next trade because I want to see it win before I take the trade. Well, you do that, you're sort of trading your trading method rather than trading the market, and that's a mistake that a lot of people make. You have to have confidence in your trading abilities, that when you do have a loss, that you understand that losses happen, and you have to be able to move on to the next trade. It's like with basketball, right? I mean, good basketball players, they take the shots, and if they miss it, they don't get down on themselves. They go on, get the ball back, and they take another shot. That's what it's about. You got to be in the position so that when the opportunity comes, you're going to take advantage of it. And it's not luck, but it's about being positioned, mentally and emotionally. Mentally and emotionally is the same thing, but being positioning yourself so that when the opportunity is there, you can take advantage of it. So, you take this trade, you take the loss, period. You move on, you take the next trade. Now the next trade, you're getting in here at 72, 73, and boom, it goes all the way up to 90, 93. That's what you got to do, right? You got to move on from the trades that sting you to the next trade, because it's going to be the next trade that's going to come in for you. So now here, this is interesting. Now again, this is similar to, this trade here that didn't work out. Okay, notice this point, this stacked imbalance. It's off the low. Okay, I would like it. I'll say I like it more if it was on the low, but you can only trade what the market gives you. It's not not everything is textbook examples. But then look what happens. You get up here to a swing high. I got a bearish ratio. I got a single print. I got stacked imbalance again. Now that this time is a stacked selling imbalance, right? So we just rallied about 30 ticks. I got a swing. I got some selling coming in here. Okay, I could get short. And what do you do? I mean, you get short here at 94. Is it a great trade? No, I mean, it trades down to about 90. You get another stacked selling imbalance in here. It just sort of spins around, spins its wheels. Eventually, it comes off. From the 94 area down into the the 84 area, but it took a long time. Honestly, after you get this next stacked imbalance, you sort of run into these bullish ratios, 52, 52, 37, and the market doesn't go anywhere. You have this other stacked imbalance in here. This is the one that you would have taken, but you're just sort of spinning your wheels. And again, this is another thing that a lot of traders don't understand is, if you're not getting paid on a trade, you see you're getting short here, 67.95. It's a 1 minute chart, 721, 730, still at break even, 740, still around break even. You get out. There's nobody saying you got to stay in this trade until it stops you out or it goes to your take profit. Again, it's about minimizing your risk. The longer you're in the market, the greater the chance that you're going to have of taking a loss, period. I mean, yeah, you can win, but you could also have a loss. So, okay, so then we start coming into the 8 o'clock time, and here's a stacked imbalance. But this market has been going nowhere. So I like to take stacked imbalances. If it's a selling imbalance, I like to take it after a move up. If it's a buying imbalance, after a move lower. Not when we've just been trading at the same level for the last 15 minutes. 742 up to 754, and as you can see, it goes nowhere. It goes nowhere. Traders, a lot of reasons traders don't succeed is they don't take their trading ideas in context of the market. They say, oh, I got a stack selling imbalance, I got to take it, period. No, you look to the left. What's the market been doing? We've just been trading there for the last 10 minutes, 12 minutes. Well, it hasn't gone anywhere for the last 10 minutes. Eventually it'll go somewhere, but it's not going to be the strongest signal. Then what do you get right after it? You get a bar with multiple buying imbalances. Okay, so as you can see, the market is just mixed. Okay, now what else did I want to talk about here? Just really quick, some other stuff. Where is it? There's something. Bear with me here. I'm not trying to cherry pick, but I just want to show you some good examples of some decent trading opportunities. So there was one, I can't remember what market it was in. I mean, I could go through all this, but this video would be 10 hours long. Okay, so like this here. So you have the swing low, way back in here. Okay, down here. I mean, even earlier. 67.72. All right, we start rallying. 72, we get all the way up here. 72. All the way up to 68.32, and then you got a stack buying imbalance. Again, this is what I talk about, taking things in context. We just rallied 50 cents, then you got a stack buying imbalance. Can the market go higher? Yes, it can. But what's the potential on the trade? Is it going to give you a decent profit? I mean, yeah, like I said, it can continue to keep going, or it can just go sideways, or or that could be the high. That could be your blow off retail, everyone that just missed this move coming in and said, oh, crude just rallied 50 cents, I got to get in. They get in. Okay, then what? Nothing, right? If you have the stack buying imbalance, what you would expect to see is continuation, right? You don't see the continuation coming in. Instead, you just see a market hanging around that buying imbalance. That's not a good sign that this buying imbalance is going to work. In this case, the market was kind of generous to you, that had you gotten along off this stack buying imbalance, you could get out at a small loss. Because, after the stack buying imbalance, if after the next 3 bars, 4 bars, it's just hanging around, not going anywhere, that's not a good sign. And if anything, it's a sign to get out of the trade. Now this one here, this one I love. Again, this is something, this is why I created the Orderflows Trader software. And again, this is something that is a very valuable piece of information that you get only from the order flow. and it tells you when traders are trapped. Now, everyone, I don't like the term trap traders because I think it insinuates something that's not necessarily true. So in this case, you know, when people talk about traders being trapped, they'll say, oh, you know, you got 40 lots, 82 lots, 167. You got these traders, you know, whatever that is. It's about 300 contracts, 280. And they'll say, oh, you know, these guys, you know, they're stuck. Okay. Well, there's enough volume for them to get out, you know, on the way back up over the next couple bars. But instead, what it's telling me, you know, is it's telling me that there's no more interest in here. You know, you sort of have this, like I said, like I was talking about earlier with that stacked imbalance at that swing high, where, you know, you need the follow through buying, right, for the market to go higher. Here you need the follow through selling. You got selling imbalances in here. Why isn't this market selling off? Why? Is because you have some strong bidders coming in here to support this market. You know, look at this area. Just look at this, the volume here. 200, 157, 115, you know, 90, 135, 167, 82. You know, I know that there's strong support in here just on the bid side. Okay, I got a bullish ratio. I got point of control right on the bottom. I got the green arrow. Again, I'm not someone that says like red light, green light systems, but you know, this is, I had to have some way that was going to mark it on the chart for me in an easy to see format. That's telling me, you know, that these people that are selling into this low, selling in the hole, are stuck, right? That there's strong support here, and what happens is you just sort of linger around, and then boom, it finally pops up. So, you know, imagine you're getting long in here, 68.28. Again, it's just sort of hanging around here, and then it pops all the way up, you know, all the way up to 40, you know, 40 plus, 45. But, you know, that was something where, you know, the order flow is telling you something. Okay, now here's another thing this is another setup that I talk about with order flow. This is a 3 in a row, 1, 2, 3. Okay, and it's just 3 ratios in a row, and these are 3 bearish ratios that tell me there's price resistance here. So it's a ratio bounds low. So what that means is it's a number between I'll show you here, if on the settings, right? And again, you know, this is what separates my software from all the other software is, you know, we have these indicators. I just showed you the one with the trap traders, but this other one here, where is it here? Ratio bounds high, ratio bounds low. If you set it at 28, it'll be blue. If you set it at 0.69, so what it's looking at is a number from 28 and above for a ratio bounds high, which indicates price rejection. Ratio bounds low indicates price support or resistance, and it's a number between 0.7 basically and 0. Can't be negative. So if I see a number above 28, I know that there's price rejection. If I see a number below 0.7, 0.7, then I know that there's price support or price resistance. And when you start stringing them together in the same direction, as the market is moving down or moving up, in this case it's moving down, it's telling me that there is resistance selling. It's telling me that there's sellers up in here, people offering the market, capping the market. You got 1, 2, 3 in a row. You retrace back up. Well, this bar here opened up, traded, you know, within 1 tick of that point of control, and then sold off. You know, to me, those are you know, the easy trades. There's nothing easy in trading, but you know, when you start putting these things together in the order flow, it just really reveals, the market reveals itself in the direction that it wants to go. Now here's a stacked imbalance. Again, you know, do I like this one? It's sort of in this area, even though the market did go up. Again, you know, take it with a grain of salt because it's coming in an area where we had just been trading for the last 15 minutes. You know, I don't find those to be very high percentage trades, honestly. So, you know, that's not one that I would normally take. Now, again, here's another 3 in a row. 1, 2, 3. In this case, you got ratio bounds low, price rejection, ratio bounds high, and a ratio bounds low. 1, 2, 3, and you know, you're getting long in here. 68.30. Boom, a quick, you know, 15, 20, you know, 15-cent move from 68.30 all the way up to 68.45. I mean, it went up to 68.50, I believe. But again, you know, that's the beauty of using order flow, and you know, that's one of the reasons why I created these tools. You know, the ratios. You know, here you got the red arrow telling you a potential short. Notice how, you know, it's telling me that this is an area where there's price resistance. It does come back up. You can see it's traded some good volume. It did tick through there before finally selling off. again, multiple imbalances. That's why that's what this purple box is. Price rejection up in here. Sign of earlier price rejection earlier in this bar as well. Market sold off, and then you're sort of coming into the close for the day there. All right, so really quick, this is the bond market from Friday's 4-range chart. I like 4-range on the bonds. So here the market is just sort of going sideways. Boom, 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 boom. Now notice bullish ratio, bearish ratio, bearish ratio, bullish ratio. Going sideways. You got stacks on them, not stacks on imbalance. You got multiple imbalances in here. 429.69, 214. Then you get a bearish ratio here. Single print, single print, single print. Bearish ratio, bearish ratio, bearish ratio. 1, 2, 3. This is what I just showed you in the crude oil. Now this is what I call the 3 in a row. Look for a pullback. Sometimes you get the pullback, sometimes you don't. In this case, you do. You get the pullback between these 2 point of controls. You get short in here. This is where you get short, is around this point of control of the 3rd bar. And again, why are you doing it? Because you know the ratios. Again, I'm not concerned with the number. It's not like 864 is greater than 64. It's a ratio, so all I'm concerned about is this blue or not, basically. And if you're getting short here, 143.18, you get a nice move down to 10. Even down to 08. But honestly, down in here, I'm seeing the bullish ratio coming in there. That's where you'd be looking to get out, somewhere in here. So from 18 down to 12, it's nice 6 ticks in the bonds. I know a lot of people will be happy just to take that once a day, every day. Then on the way back up, this is a nice thing. I talk about this type of bar, these bars right here in the inner circle. This is a nice buying opportunity right here. But again, to get access to that, you gotta get the software. Again, it's all about education and knowing what to look for. So hopefully you found this video useful. Again, I'm going to try and get more videos up now that my life is sort of back on an even keel. Honestly, I got the guys at Ninja Trader on my back about a lot of stuff, but my life's really been upside down for the last basically since since the whole year. But things are getting back down to normal, and I'm finding time to do stuff. So thanks everyone, and have a great day. Bye bye.